Do I have to? Why is it important? Tips on getting started. This is Bookkeeping 101 for real estate business owners. Today I'm going to share with you real estate business bookkeeping tips and tricks to getting a grip on your business financials. Now, I know what you might be thinking. I can't afford a CPA to work with on a monthly basis, or I don't have time to track all my business financials. Or maybe you're thinking you just want to get that better grip on your small business bookkeeping so that you can grow your real estate business. Either way, you can't avoid doing your books, because if you do, you're not going to be able to file your business taxes, and you won't be able to run your business effectively because you won't know what's going on financially. Hi, I'm Andy with Simple Numbers Bookkeeping for real estate agents, teams, and brokerages. We're a full-service bookkeeping firm that is dedicated to helping real estate team leaders and brokers get a grip on their business financials so that they can avoid the common frustrations that come with tracking those numbers, and they can start making the money that they deserve in their business. I'm going to talk about what bookkeeping is, why bookkeeping is critical and necessary in your business, how it works, and tips on getting started. Let's dive in. So what is bookkeeping anyway? Well, bookkeeping is the process of tracking your income and expenses. That's it. Most people like to believe it is more than that just because of the plain sight of numbers. But honestly, it's just that simple. Just tracking your income and your expenses. Now, how you use your bookkeeping to grow your business is the game changer. Make sure to keep watching to find out how. Okay, up until now, you've heard what bookkeeping is and how you can use it to dramatically improve the bottom line of your company. But what makes it so important and necessary in your business? Well, reason number one, bookkeeping helps you budget when you're properly tracking your business income and expenses. It makes it easier to manage those financial resources. Budgeting creates a financial roadmap for your business so that there aren't surprises. Reason number two, bookkeeping is necessary for tax preparation. In most cases, your business has to file a tax return every single year, and every year it's a hassle. Sound familiar? The tax filing process can be made so much more efficient by simply having monthly bookkeeping within your company. Bookkeeping is important for filing your personal tax return too, because as a business owner, a large part of your income comes from that business. In order to know what you've earned personally, you have to know what your business earned first. Reason number three, bookkeeping is important because it helps you make better business decisions by first understanding your financial performance. The product of bookkeeping is financial statements and reports. Financial statements should be regularly prepared and used for making business decisions. While reviewing your financial statements, you can track your cash inflows and outflows and overall profitability. And that is what you should want as a business owner, profits. The only way you can get there or improve on them is with useful information, and that is your bookkeeping. So how exactly does bookkeeping work? Well, think of it as a small business cycle. It starts with a transaction. As a result of this transaction, there should be some sort of source documentation. It could be a receipt, an invoice, a note payable. This documentation serves as sources of information that your bookkeepers use to record your transactions. Now, if you're like most business owners, you might find it tedious to keep up with every little receipt. So having your monthly bank statements would be a great alternative. The next part of the bookkeeping cycle is determining the financial effects of your transactions. This part can be a little bit more tricky and is usually where the expertise of a company like Simple Numbers is needed. A CPA can help, but most don't understand the real estate business intimately. They are taught how to know the basics of all businesses, but not any one business model specifically. Here at Simple Numbers, we understand the complexities of the business because, unlike a CPA or a general accountant, we've actually built a successful real estate business ourselves. And we've broken it down for you in the 5 key numbers you must know in your real estate team's financial statements for your real estate business. We call them the 5 simple numbers. So let's jump into those in detail. The 5 simple numbers you must know from your business income statement or P&L are, number 1, total revenue. This includes all the income from your real estate business, things like commission income, vendor income, referral income, transaction fee income, and more. This is the total income into the business before your broker or your team members received their portion. Total revenue in your business shouldn't include revenue from personal investments or profit or revenue sharing. These are separate businesses altogether, and if you include those in your real estate revenue for your team or your brokerage, it could throw off your margins. The second of the 5 simple numbers is cost of goods sold or cost of sale. Cost of goods sold is simply the direct costs associated with producing your goods or services. In the real estate business, this usually consists of your broker split, your agent splits, maybe your ISA and showing partner splits, your outbound referral fees. Generally, any one single cost that gets paid as a direct cost of a specific transaction. There are exceptions to this, but in most cases, these make up your cost of goods sold. Now, the third simple number you need to track in your business financials is gross profit. This is simply the profit a business makes after subtracting all the costs that are associated to delivering its service. Simply put, it's the company's total revenue minus the cost of goods sold. The fourth simple number in your P&L is your operating expenses. Operating expenses are different than your costs of goods sold in that these expenses are not tied to an individual sale, but instead an independent expense that is incurred through normal everyday business operations. Here at Simple Numbers, we've found it most effective to categorize all of your operating expenses into one of 3 main categories. The first category is a people expense, also referred to as salary. People expenses are made up of your staff or anyone that's paid as a W-2 employee. The second category of operating expenses is marketing and lead generation. This would usually consist of any dollars being spent in the business with the intended result being a generation of a new opportunity or lead, which is why we call it marketing and lead generation. The only exception to this general rule would be dollars spent with the intention of general branding of your business, which may not have a direct intention of generating an individual lead, but would be considered a form of marketing and part of this category of operating expenses. The third and final category of operating expenses in a real estate business is called overhead. Overhead is simply any dollar spent that isn't a people expense or a marketing lead gen expense. Typical examples of this include, but are not limited to, things like office rent, office supplies, auto costs, travel, meals, education and coaching, and others. In essence, if you didn't pay it to an employee and it wasn't intended to market your business or generate a lead, it would be considered an overhead expense. So again, the 3 categories of expenses are: number 1, people; number 2, marketing and lead gen; and number 3, overhead. You should have a target goal for each of these 3 categories so that you don't overspend in your business and eat away at your profit. Now, the 5th and final number of the 5 simple numbers is net profit. This is very simply the amount of money you have left in final profit. To calculate your net profit, simply take your gross profit and subtract your operating expenses. Net profit, in our opinion, is the most important of the 5 simple numbers. After all, you must be able to make a dollar to make a difference in your business. If you're working hard in your business, selling a bunch of real estate, often working 7 days a week, and you still aren't taking home the money you thought you would when you started your real estate business, I've got some good news for you. There are only 2 places you need to look in your P&L in order to fix the problem. The first is simple number 2, the cost of goods sold, and the second is simple number 4, your operating expenses. That's it. If you're off in one or both of those categories, you won't be as profitable as you should be based on your revenue. I hope you can now see how important it is to correctly classify each of your business transactions and understand the 5 simple numbers in your financial statement or P&L, so that you can accurately interpret the financial performance of your business. This is the bookkeeping cycle in a nutshell. Now, you might be curious to know how to get started with all of this. No worries, I have outlined 5 simple steps to help you get started with your real estate business bookkeeping. So let's dive in. First, you must open a business bank account. If you're a sole proprietor, you're not legally required to do this step, but if you want clean and easy books, I highly recommend having a separate bank account for your business. Even more so for other business types like LLCs or C Corps. If the IRS finds out that those business types don't have a separate account, this could mean the end of those businesses and grounds for termination by IRS standards. Furthermore, consider the headache you'll avoid at tax time by having a separate account instead of cycling through your year's deposits and expenses and trying to remember what was personal versus business. Everything will be centralized in your business bank account. You just want to make sure that you have an EIN number or employee identification number, which you can request from the IRS. Second, set up a bookkeeping system or hire us here at Simple Numbers to handle all the books on your behalf. Bookkeeping is an ongoing process for every business. It should be completed at least monthly to stay on top of your finances. One great way to establish a bookkeeping system is to invest in accounting software like QuickBooks. A program like QuickBooks allows you to perform monthly, weekly, and even daily bookkeeping tasks. The best part is that most of these programs enable you to connect your business bank account, which makes tracking income and expenses easier and less time-consuming. The third step in setting up your books is setting up a system of classification for your expenses. We call this a chart of accounts, or COA. This is basically your list of accounts that you'll use to define each of your transactions. Remember the 5 simple numbers I mentioned earlier? It comes to play right here. As transactions are coming in, they'll need to be placed in the appropriate category. You'll also want to follow the best practice of drilling down even more into what each transaction is. For example, perhaps you do several types of online lead generation for your team. You might want to consider creating subcategories for marketing and lead generation like Zillow, Ylopo, Google Ads, Facebook ads, and more. This way, you can track how much you're spending in each category in accounting and also track your return on investment for each lead source. The fourth and next step in setting up your books is to reconcile your accounts each month. Reconciling your transactions is the practice of determining any difference between the bank balance shown in your bank statement and in your bookkeeping system. You want to make sure that none of these transactions are missing or double counted in your bookkeeping system. The fifth step in setting up your monthly bookkeeping process is to prepare financial statements, specifically the balance sheet, income statement, and cash flow statement. The balance sheet shows your outstanding balance of assets, liabilities, and equity. The income statement, or P&L, shows your profit or loss for a specific period. The cash flow statement shows the movement of your cash related to your financing, investing, and operating activities. Each of these reports should be prepared and reviewed at least monthly. And don't worry, the bulk of the work has already been done when all of your transactions are classified and reconciled. Finally, there is very little point in doing all of these steps if you aren't going to use the information to make better business decisions. The textbook definition of accounting is centered around one major concept: business decision making. As a business owner, You are faced with business decisions day in and day out. And in any decision you make, there are considerations mostly related to your finances. Would X add value to my company? Can I afford X right now? What are the financial implications of X? X being a decision you're considering. These are just a few questions you might ask yourself as a business owner. Ultimately, the answers of these types of questions and more are found in your bookkeeping. There you have it. You've just learned the basics of bookkeeping in your real estate business, or Simple Numbers 101, as I like to call it. So to recap, bookkeeping is simply the tracking of your income and expenses. Bookkeeping is important because it helps you budget, prepare for taxes, and make business decisions. Bookkeeping is a cyclical process that starts with a transaction and ends with the preparation of financial statements, like the income statement, the profit and loss. To get started with bookkeeping, you need to first open a business bank account. Second, set up a bookkeeping system. Third, set up your chart of accounts to classify your expenses. Fourth, reconcile all of your business transactions monthly. Fifth, prepare financial statements. And sixth, implement business decisions that are derived from your bookkeeping based on the 5 simple numbers. Simple, right? If all of this sounds a bit overwhelming, you may want to consider engaging an experienced bookkeeper like us here at Simple Numbers, or an accountant that understands the real estate business to help you tackle this process. I hope you found this video useful and interesting. If you'd like a free, confidential financial consultation, please visit us at simple-numbers.com. Until next time, take care.